Good day, everyone. Today is June the 27th, 2024. I thought what we would do today is have a video entry, and we're going to try and do more of these for Read the Positioning. So just a little bit on what GTC offers now. There will be more in the future. We have a member area that's hosted here. And if you go to the member area, there's two tiers. So Read the Positioning, the description's all there, or Read the Report. With both of them, you get our daily note, and our weekly note, I should say, and the daily note. The moves we're making as we make them. With Read the Report, that gets into a lot of the nitty-gritty of just the sort of the quantitative and qualitative and systemic and program, as well as the discretionary thoughts behind all of the moves that we're making in the different programs we run in multi-strat. Whereas we don't get into that and Read the Positioning as much, but it's more just a live look, daily note. And just as a reminder, the daily note is not positions. The daily note is sort of cementing in your mind where everything's at in the world markets. So there's a lot to keep your head on, your eye on, I should say, and your head in. And we have found that by typing up a daily note every single day, it keeps us grounded in what's going on in world markets, right? And then we also have the position review, and both get that, right? So both the Tier 1 and Tier 2 get the weekly note, the daily note, as well as the position review each day and the positions as we do them. It's just in Read the Report, we get into a lot more of the analysis and why we're making the moves we're making. Plus with, almost forgot this one. With Read the Report, we now have a room, right? So I trade in a very relaxed manner, one might say. And you'll see that as we go through our positions. That's what we're going to do, is we're going to go through our positions and sort of where we stand today in this Read the Positioning. And we're going to put this whole thing out there for free, although we're going to do more of these for actual members. But I like to trade in a rather relaxed manner. I do scalp. I do day trades. But right now we're playing a very tight-knit game, which is what I'll get into. We're well on track for our yearly goal. So at least, without getting into the nerd speak of heuristically dynamic, I know Nick will like that one. Heuristically dynamic portfolio management. Without getting into all that geek speak, right? Which is actually very simple. Nick made an excellent tweet today. I suggest everybody go read it. Nick Lentz, and it's beautiful. I couldn't word it else. Little lump in my heart. When I read it, I was like, oh, that's just bang on, brother. Bang on. That was well said. But it's actually very simple. It's just what matters and what doesn't. So, and Nick had a lot to say on that. But anyways, let's stop this for a second. Let's get into it. So we're going to go through the position review, discuss some things that we talked about in the position review, just review some of our positions. Well, actually now we're winding out the flat cash and sort of the short-term trading book. Talk about where we stand for the year, since we're about halfway through the year now. And let's get to it. As ones who have followed me for years know, I like to keep my eye on major economic news that's hitting and might have an impact. Everything is very rates focused right now in markets, and we all know that. Today was GDP. Turned out to be a big nothing burger. I think the consensus, if I am not mistaken, the consensus was at 1.4, and that's where it came in, at 1.4. So I did find it interesting. New home sales slipped yesterday. That's not really a big economic number. It's just something I've been keeping my eye on. And I think they expected new home sales to come in at 2% for the month. And it came in at negative 11.3%. So that just is one of those things that caused me to raise a Spock eyebrow. Like, interesting. So that was the economic news. Very obviously, the big news this week is going to be, not maybe impact. It may have a massive impact. It may have no impact. But the big news that everybody should be paying attention to is core PCE, which is tomorrow from the date that I am recording this. Okay, now let's take a look at that equity, income equity hybrid that we have. That's sort of a 2 years to indefinite. The basket itself has 18 pieces, and we're still in the process of building it. And as I've said before, and I'm going to say it again, right here is a picture of the first piece I always have in my on my watch list, which is Medtronic MDT. But as I was saying, as I've said before, we're playing very, if we want to use poker parlance, we're playing a very knit game right now for very quantitative as well as qualitative reasons. So we're being very conservative here. The basket itself has 18 pieces, but thus far we just bought into Medtronic. So we have Medtronic. Here, let's get in a little more price history. There we go. So we just bought into Medtronic. We also have IBM that we just bought into not too long ago as more of an income piece, because these pieces were put together for very, very, very specific reasons. And this one's more just of a stabilization and income piece. We also have the ETF PCY, so we still hold PCY. And by the way, if you want to know the pieces where we bought all of these, we do put the positions out a little later on the actual GTC Traders website. And if you don't want to go through all of the GTC Sample Portfolio entries, I completely understand that because they go back a ways. And by the way, we pick the programs we have. We have many different trading programs that we use, but we pick the ones we have because you can't cheat with them. They're multi-day. Some of them are longer term. Short-term trades are like 45 days to 2 days. I might take day trades, right? But it's hard to cheat when you have a longer periodicity. And there's a lot of cheating that people do out there. There's a ton of cheating. So we pick longer periodicity programs because then it's harder to cheat with it, right? People can see that, no, we're being transparent. This is actual. This is real. The performance you're seeing, there are no do-overs in trading. Regardless, though, if you go to the articles in any one of these, some of them for the longer term core, we recorded the piece and where we bought it at, so you can see that there. It's not on every GTC sample, but we might include that in the future, just so that ones can keep an eye on it. It's easier to see. Regardless, getting back after PCY, we also have, let me thank the ETF, also that's obviously a little more volatility, but also an income piece. We bought a tiny little bit of JNK. So we have JNK. We also have another similar piece, SPHD. I believe we are currently neutral on SPHD, which is lower volatility equities ETF with a higher dividend. And of course, we need beasts. We need pieces if we're going to build this hybrid core to the thesis that we built the program, right? You've got these stabilized income pieces and some with even a little more volatility like J&K. But you need a beast. So what better beast can you have than like Costco or something like that, right? The income's very low, but this is a hybrid core we're building. So we've got Costco. I think we bought it down, was it $550, $560, something like that? So we've been enjoying Costco. There's my problem child. Yeah, it's my problem child. I'm going to be reviewing it. You know what's great about this process is I don't have to review it immediately, right? There's no big hurry. The whole process is up, but this is definitely my problem child I'm going to have to take a deeper look at. But there's a very specific reason why this piece is in there. But yes, Diageo, DEO. Kroger, good Lord. I think Kroger was our... Man, where was our... Where did we buy in? I don't know. You'll be able to see it on the article, but I want to say it was something like $43 or $44, somewhere in that region. I'm loving this pullback a lot. But yeah, we've had Kroger, so we've enjoyed that this year. Union Pacific, another one we got at a great price, and it's pulled back, and this is exactly what we want to see out of this. Exactly. This is one I have held for years and years and years. Actually, all of these I've held for years and years and years. But this is one of my favorite children, is Union Pacific. Oh, I forgot about this one. This is more in those pieces that work for sort of stabilization income, which is the ETF that follows utilities, which is XLU. I think we just got paid a dividend there as well. Wells Fargo, one of my favorite pieces simply because, it's been up, an upgrade from when we bought it. What did we buy it back last November, I want to say? Like around $40, $41, something like that. I forget. You can find it on the articles page. But regardless... It's so wonderful when you get something that's been so beat up for so long and you review everything and everybody hates it, and it's like this ultimate troll, right? You follow your process, you ignore what everybody's saying, and you just troll everyone. And that bit of Schadenfreude, right? I think every trader has that. So there's that little piece of us, maybe not very Christian of me, but I'd be lying. And when that's not very Christian either, I'd be lying if I said I didn't have massive amount of enjoyment of just how much Wells Fargo has sort of trolled everyone. So we've continued to hold Wells Fargo. We just bought CME. So we just put CME in our portfolio. And then the last piece that we still have, which has done very well, and there's a very specific reason why this one is in there. It's an ETF again. It's not a single name. It provides upward. I like. How do I put this? I like how low the downside deviations are on NTSX. So I love how this thing's composed. I use it as its own hybrid piece of its downside deviations are quite nice. How it's composed, what it does, and then what it provides to the entire basket, right? Now, again, we don't have all 18 pieces yet. We're working on it. We're still building up this hybrid income equity hybrid core thing that I have built. And just count all of those dividends as they come in, right? Now, the valuation desk. Let's talk about sort of the valuation side of the book or trading. Where are we at for the valuation book? Let me take a look here. Oh, and by the way, before I forget, this is something else that Tier 2 members are going to get. I'm almost done completing. It has a little bit more work to do. I'll probably release it and give everybody the link so they can see it and how I compute all the metrics and how I compute the Sharpe and the Sortino and the downside deviations and all of the things you can pull out, right? But this spreadsheet will be, all the Tier 2 members will be able to have access to it, at least to view it, to see the formulas, to see everything, right? So where were we at? We were talking about the valuation book. So here's the valuation book. Thus far, up 4.38% for the year, I think. I'm not sure. I might have to update that with the new numbers. I don't think this has been updated with the new numbers because I think it's a little bit higher than that. So this is quite nice. It's sort of a hybrid between classic valuation investing on a classical sense with some adjustments that I've made, heuristically dynamic adjustments, as you see. Simple adjustments that are made that do have a massive impact. And right now, I'll just go ahead and tell you, I have a carry short because I think the market, just to throw it out there, I'm going to have a podcast on macroeconomics and how you don't need them, but why I look at them, why I look at the macroeconomic picture and try to understand it, even though you don't need it necessarily per se to trade. You don't. But I like to know. Well, anyways, that's for the podcast. Regardless, getting back to the valuation book, right? It's classic valuation investing, a couple of simple adjustments because of where I believe we're at on a macroeconomic basis. I believe equities are, if we're talking longer term, are later stage of a massive rally we've enjoyed for a long, long time. And I don't think there's a lot of value out there. And very much, I'll go ahead and say this, I'm very much in Buffett's camp. My primary consideration at the moment is always making sure I can have plenty of cash. That's it. That's my primary consideration in this macroeconomic environment. Now, I think we are late stage, the later stages of this massive stock rally we've enjoyed. However, I also believe that we are not quite in the fully developed bubble, and I think Ray Dalio is correct there. It's not a fully developed bubble yet. But I think his work focuses on when can you say, yes, it's 2000, and this sucker is without question a bubble. I think that's, I could be wrong. I could be wrong, but I think that's what his work's saying. I also believe that we are at the beginning stages, and nobody knows how long it'll last, of an AI bubble that hasn't really spread out throughout the system yet, but is starting to. So I think we're in the beginning stages of a bubble. So that, like, what do you do? What do you do with that, right? Before I said that on a scale of 1 to 10, I thought we were at like a, what did I say? Like a 6.78 or maybe a 7.2 as far as value. We were stretched on a scale of 0 to 10, and that was in that podcast we did months ago. Last year, I think we did that podcast. Well, I think we're at a 10 now. I think we're at a 10 or a 10.1. And as I said then, oh, we can go to 15, baby. It can go to 18. It can get nuts. It can go psychotic. So if you feel you're in a late stage, like the late stage of a stock market rally, and you're at the beginning of the bubble stage, not fully developed yet, what do you do if you have a valuation book? Like, how do you approach that? You can't, like, trying to find value is extremely difficult, right, on a classical valuation basis. Well, that's why I said this is not your classic valuation approach. There are some very simple but very robust adjustments we've made and do make such that, well, thus far we're up, it looks like we could hit 10% this year, perhaps, in the valuation book, 9%. Not too bad for this sort of environment where your primary consideration is making sure you have tons of cash. And not only do you have tons of cash, but you have to print basis points. Even if that's your take. My take is like, why do I think we're a late stage rally? My thoughts, not yours. Our thoughts, not yours. I think we're at the beginning of an AI bubble that hasn't really spread out yet, but it's starting. Well, you still got to make money. Your primary consideration may be capital and have plenty of cash and be liquid, but you still got to make money. Well, we got some cool ways to do that, and that's what we're doing there. Up 4.38% thus far for the year. And considering the environment, I am very, very, very happy with that. All right, moving on from the valuation desk, short-term trading. We're doing something very, very specific there. And we already put it up on the articles, but I'll just go ahead and share it here. Might as well put us on the grid there. All right, here was the sort of note for today. We have exited almost all of our positions profitably. Got rid of T-bills. NVIDIA I'm still evaluating. And quite frankly, I'm going to be away from the desk tomorrow. And so since I'm going to be away from the desk, and for a host of other reasons, we're basically sort of evaporating the short-term trading sort of desk or side of the book to cash. Right? Which I really am going to enjoy that since I'm going to be away from the desk. So we still evaluate the risk mix. It's still too elevated. I got stuff in my trust going on. I'm still evaluating NVIDIA, and because I figured, okay, this thing's probably going to like congeal, backfill. Let's see what happens with that. All of the short-term trades, as we published the other day, we basically took the profit on all of them. So like 1 cent below max profit on all of them. We still have PLTR and we still have USO. Those we're letting go to expiry. Probably by the time you're viewing this, it's probably expired profitably. Exited the T-bills. And then with that, we're flat cash in the short-term trading book. So that allows us to watch core PCE from the very comfortable perch of cash while I'm away from the trade desk. And then we can see how we're going to get started in... Oh, let me think. We're going to, in July. Good Lord. I'm so barbecued at the moment. It's like, I don't know what month it is. So yes, for July. And then, so that puts us, let me think, short-term trading book. Well, here, I'll just show you the short thread we had on it. We put it up on Twitter. This particular thread right here. So basically lists where we're at. Quotes this thread, basically our approach at the moment that we just put out there publicly. And then sort of outlines our thought process and sort of what we're aiming for and playing that non-aggressive nit game, as I mentioned before. All right. So that is the read the positioning, sort of a video entry as we round out June of 2024. I hope everyone is having a fantastic summer. Lord knows I am. I am so busy, though, I can't keep my head straight. I didn't get to class this morning, and I didn't get to roll, and I'm just really bummed out about that. Because I saw photos of everybody on social media rolling. It's like, oh, good Lord, that looks like 10 tons of fun. I didn't get to do it. I was so baked this morning. But regardless, that's just what we have going on. And that has simply been what it always is. All it is a look over our shoulder. It's just our thoughts. Our thoughts are good until we cancel them and adjust. And they have been just our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.